In data just out, inflation in the world's largest economy, the U.S., slowed slightly last month, but it is higher than economists had expected. While the consumer price index rose by 8.3% in August, analysts had expected inflation rate to slow to around 8%, but still it is down from the 8.5% recorded in July after hitting a 40-year high of 9.1% in June. Well, for more, Will Denslow joins us live from New York. Well, Will, is the latest inflation reading enough to slow the pace of the U.S. Federal Reserve's tightening? I mean, gasoline prices may have come down, but the same can be said for food and housing.
Absolutely. Well, this will certainly essentially concrete in the minds of investors and watchers of the Federal Reserve that perhaps without a shadow of a doubt, the Federal Reserve will go ahead and raise interest rates when they convene in a couple of weeks' time here in the US, that they will raise interest rates by another 75 basis points. That was widely expected even before the release of August Consumer Price Index figures. Attention will now, of course, turn to action the Federal Reserve will take going forward. I think with these figures, there'll be a growing feeling on Wall Street that the Federal Reserve will continue to take such strong action with further rate hikes of at least 75 basis points, 0.75% going forward. Of course, we've heard from the Federal Reserve Chair Jerome Powell and other Fed members speaking in recent weeks, essentially that their number one priority is to get price pressures back under control. And the Federal Reserve Chair has warned that this might cause perhaps some pain to the US economy, but that is absolutely crucial to tackle inflation first. So this CPI figure, considering the fact that gas prices are dropping, will certainly be seen as more ammunition for the Federal Reserve to keep moving aggressively.
Yeah, and causing more pain to the U.S. economy. Key midterm congressional elections, they're just weeks away. How will the latest data play into that? I mean, inflation has become a hot political issue.
Well, the message from President Biden has been that he's prepared to let the central bank do its job and that he is happy to let the Federal Reserve do what they think is right in a bid to get inflation back under control. The Biden administration has also pointed to factors such as the jobs market for signs that the US economy, while inflation remains up at near 40-year highs, that the economy hasn't slipped into a recession, despite the fact that we've seen GDP now tick down for the last 2 quarters. He says the fact that the labour market is showing real signs of underlying strength, that is a sign that the Biden administration, that the Democrats in power in the US are successful when it comes to recovering from the COVID-19 pandemic and the huge amounts of economic pain caused there. And the fact that despite inflation being up at 4-decade highs, that there is still some signs of growth, some signs of strength. So it'll be very interesting to see whether things like labour market data starts to weaken in the weeks and months ahead as we see interest rates continue to rise, or widely expected to continue to rise, and whether that will shake the view in the public's eye that the Biden administration doesn't have quite such a strong grip of the economy that at least they say they do at the moment.
Many thanks for that. Will Denslow there in New York.